Eric, I got to get your take on what you thought of the Lyft rollout and whether or not it has implications for things that are still in the line.
I thought it was a great IPO, and despite the dip earlier this week, the stock is trading sharply higher than the private valuation. And it kind of reminds me of all the skepticism. Remember about the unicorns when they first came out, the companies that were worth $1 billion or more. How is that possible, and how can they possibly go up from there? Well, a lot of these companies that you just mentioned are valued in $15, $20, $25 billion. If Lyft is any indication, it's a good sign.
Why do you think it was a good IPO? I'm sure there's a lot of retail investors out there who were very excited to get into the stock on Friday and are now feeling pretty burned today.
There's a tremendous appetite for growth stocks. And all of the companies, again, that are in the pipeline have tremendous growth. And so the investors are overlooking the fact that they're currently in a money-losing phase. And the other thing I think is a factor is that the number of stocks that are publicly traded is down sharply over the past decade or two decades. And we just need more public stocks. People want to buy stocks.
Mike Isaac, what does this mean for Uber? I know that you've been digging into Uber quite a bit. Book coming out. They have their IPO coming. They're bigger than Lyft. They are the category leader. On the one hand, Lyft's valuation overall, pretty nice. But on the other hand, the action since the IPO, not as nice. It is up nearly 4% today, but still below that $72 a share price where the IPO initially priced.
Yeah, totally. If I'm Uber right now inside of the company, I'm thinking when I make my roadshow pitch, look, Lyft had said to investors, we're a focused company. We only are a transportation play for the most part, and this is what we do. And they had a pretty rich valuation because of that. So Uber can go out on its roadshow and say, we are Lyft, but add to that international presence as well as a more of a platform play with different modes of transportation like bikes and scooters, as well as their booming food delivery business. So that means we could go as high as $100 billion, $120 billion in our valuation. And like Eric said, they're not actually profitable. They're still losing money. But I think what they're going to do, I have to write this piece apparently at some point, but I think they're going to sort of position themselves as an Amazon of transportation, right? We might skate the line of profitability or even making any money at all, but that's because we're just doing a lot of time putting our resources into growing in the future.
Eric, it's the one-year anniversary of Spotify doing the direct listing here at the New York Stock Exchange. You got Slack moving forward with the direct listing, reportedly also here. Other reports that Airbnb could do the same. It's a different format than what we've seen with traditional IPOs. They're not raising money, not using underwriters, not choosing the price or who gets to buy into the stock the night before. Do you think we're going to see more and more of this type of listing in the future?
Well, what's interesting in the case of Slack is that Slack is an enterprise software business, so it's not a consumer business. And Spotify obviously was very well known, widely used, probably by a lot of investors. So it'll be interesting to see if Slack can make it as a direct listing. Then I think that opens the floodgates for others to do the same. It's very new. People are still not sure about exactly what the rules are, so I think we'll discover more about this.
Are you worried at all? I mean, you get into things early, so it doesn't apply to you, but market's rewarding a lot of companies for losing a lot of money for a long time to come, it seems. And a lot of market strategists see that's a negative sign, a worrisome sign. Is it not?
Well, it depends what they're losing money for, right? So if they're losing money because it grows the top line, so you've got marketing expenditures, you've got market share gains and all of that, then I think it's justified. If you're just losing money because your overheads are super high, then that's another matter. I think most of these companies are still very much in an investment mode. The markets are really very big. The markets are global now, as was mentioned in the case of Uber. Mm-hmm. And it just takes quite a bit of money to make this work. Path to profitability is something that they'll have to talk about.
Mike, we saw Google with its Dutch auction. What was that? Certainly more than 10, 15 years ago, Spotify had this direct listing. For a while, there was this sense in Silicon Valley that startups should innovate around the IPO process itself. My sense is that that's cooled off a bit. I wonder what your sense is, and then the significance kind of culturally in Silicon Valley around this direct listing effort and where it might lead from here.
You know, it's funny. I think you're totally right. There were some alternative methods of getting liquid that have been sort of explored by a few companies. Right now, I have the sense that everyone just wants to get out the door as quickly as possible. Lyft, I think, had the foresight to try to go first, or at least before a lot of other tech companies. And then the bankers started realizing, you know, there's a sort of latent worry that maybe the market's going to soften, maybe IPO, sort of like a bull market for IPOs is actually going to sort of go away later in the year. So I think you started seeing a crowd of companies just try to get out the door quickly. And I think that also is really set off by Uber, which was, you know, I had heard for a while they were going to go in September of this year, and then they sped everything up by 6 months at least because of those fears, again, that things just might start going downhill. So right now, I wonder if innovation takes a back seat as everyone just wants to get out and get liquid as fast as possible.
Mike, are you getting the sense that anything about their IPO has changed because of what Lyft has gone through in the past couple of days?
Yeah, I mean, they are still, I think what they're going to probably do, you know, we saw in this last earnings, they do like a sort of weird pseudo earnings where they report their numbers to their investors, and then to get ahead of it, ultimately, inevitably leaking, they sort of tell reporters as well. And so that was before they went into their quiet period. So now they're in this phase where I think they still have to prepare investors that they're going to be losing money for a while. And as we can see with Lyft, they're still burning a lot of cash to gain market share. So they're probably not going to let up anytime soon. So I think it's really a matter of setting expectations on, look, we may have a path to profitability, but it's definitely not going to be in 2019.